Welcome to IFX, where we make trading simple for success. Today, we're going to break down a simple and effective strategy using the Fibonacci pullback zones. I'll cover everything you need to know, including entries, take profit, stop loss, and what to avoid. This strategy works exceptionally well on the M5 or M15 timeframe, with highly volatile pairs like gold, pound yen, euro yen. The approach is straightforward. Look for sell entries in the red zones and buy entries in the green zones. We also incorporate the 50 simple moving average and use 4-hour highs and lows to identify key support and resistance levels. Additionally, the RSI is utilized to spot overbought and oversold conditions. Now, let's dive into the strategy. First, let's adjust the RSI settings to optimize our strategy. Click on the settings, change the apply to option to weighted close, and keep the period at 14 days. Additionally, I've added 2 horizontal lines at the top and bottom to mark the highs and lows for better clarity. Now, place the top horizontal line at the RSI high of the day and the bottom line at the RSI low of the day. If the RSI makes a new high or low, simply adjust the lines accordingly. Let's make this clear. The first RSI high of the day should be closer to the RSI 70 level and the first RSI low of the day should be closer to the 30 level. Let's go over the sell strategy on the M5 timeframe. The core idea is to wait for the RSI to make a new high or come very close to the previous high of the day, while the price is in the red zones, signaling a potential sell entry. When the conditions are met, the entry can be made when a bearish candle closes, or you can choose to wait for a sell arrow alert for confirmation. Example 1, here's the first possible entry at the beginning of the day. The RSI made a new high, and the price was in the red zone. The entry could have been made either at the first bearish candle or when the sell arrow alert appeared. Another potential entry occurred here, at the first red zone and when the RSI made a new high. Now, let's say we made the entry when the RSI hit the previous high, but the price continued to rise. In this case, the second entry would be made when the price reaches the next zone level. For exits, our first target will be near the 50 moving average, or alternatively, when the RSI approaches the 40 or 30 level, indicating it's time to close the position. Example 2, in this scenario, notice that the RSI reached the 70 level, but the price was not in the red zones. This means we need to wait until the price enters the red zone and the RSI makes a new high. Here's the best possible entry, as price was on the first red zone level and the RSI made a new high. The possible exit could be after price hit the 50 SMA or the RSI 30 level. Example 3, now, let's discuss a pattern that should be avoided or where you need to be extra cautious when entering. Here's the first potential entry of the day with exit close to the 50 SMA. Notice that the price broke above yesterday's high, which indicates that entries at this point are more dangerous, and we should avoid them if possible. While this example did provide a nice entry to the 50 SMA, this won't always be the case. In summary, it's best to avoid sell entries when the price breaks above yesterday's high to minimize risk. Now, let's discuss stop loss, a common challenge for many traders. Instead of using a traditional stop loss, consider a strategy where you manage risk by using a small percentage of your account for each trade. Here's how it works. After making your initial entry, if the price continues to move higher, wait for it to reach a higher zone level before making another entry. The goal is to close both positions once they're in profit. I've observed that you can often make 3 to 4 entries, depending on market conditions. This is why it's crucial to start with small lot sizes for your initial entry to manage risk effectively. If both entries go against you, carefully monitor your percentage loss. In this situation, you may choose to close the first entry to limit your losses, while holding the second entry to wait for a better opportunity. This approach allows for greater flexibility and risk management, adjusting to market conditions rather than sticking to a rigid stop loss. Let's look at some examples for buy entries. We'll wait for the RSI to make a new low while the price is in the green zones, which signals a potential buy entry. The entry can be made when a bullish candle closes or wait for a buy arrow alert. The take profit target will be near the 50 moving average, or alternatively, when the RSI approaches the 60 or 70 level, signaling that it's time to close the position. Example 1. Notice the RSI made a new low and hit the 30 level, but price was not on the green zones. So, we wait for price to hit the green zones. Here is the perfect entry, as the conditions were met. Now, the entry can be at the bullish candle or the arrow alert. The take profit should be closer to the 50 SMA. Example 2, the entry conditions were met when the RSI made a new low at the 30 level and the price was in the green zones. It's important to note that this entry occurred above yesterday's low, which is generally safer. However, the second entry opportunity came when the price was below yesterday's low, which is a much riskier position. Always be cautious or avoid entering trades when the price is below yesterday's low to reduce the likelihood of encountering a false signal or increased volatility. Example 3, let's go over the last example. Here, we had two straightforward entry opportunities. The first was at the beginning of the day when the RSI hit the 30 level while in the green zones, short but sweet. The second opportunity came when the RSI made a new low, and this entry had a nice, extended run. This shows that patience in trading always pays off. In summary, for sell entries, wait for the price to be in the red zones and the RSI to make a new high for the day. Enter on a bearish candle or when you see an arrow alert. Avoid entries when the price is above yesterday's high. For buy entries, wait for the price to be in the green zones and the RSI to make a new low for the day. Enter on a bullish candle or arrow alert. Avoid entries when the price is below yesterday's low. Hit the like button if you enjoyed the strategy. If you need more information, you can find me on the Telegram channel.